Welcome, you're watching India Market Close, and it's been a bit of a muted day. Let's put it that way. It's been a bit of a disappointment for the markets overall. Not really able to gather strength. The Nifty still about 50 points down right now, and this has been the trend all through the day. A slight hint of recovery at some point, but then that selling pressure coming in. Banks are also having quite a down day. Let's pull up the intraday chart of the Nifty for a second and just give you a sense of what has been happening in the markets today and why you're seeing that kind of a pressure coming in. Very, very volatile and range bound. That has been the take on the Nifty overall. Not too much of movement. You'll pull up the heat map and then you'll see that the only bright spark of the day truly has been IT. Tech Mahindra, thanks to that brokerage note from CLSA, has been rip-roaring, and that has been the one bright spark. The rest of it is auto companies based on their numbers largely. M&M, their September sales numbers actually beat expectations, and that's why you're seeing an uptick there. Infosys has roared up through most of the day. Adani Ports doing well. Kotak Mahindra Bank actually in the sense an outlier because banks are overall not doing that great. Wipro, of course, coming in. So you have IT, couple of select banks, the Adani twins, Ent and Port, which are doing okay, and that's pretty much it. The rest is nothing much to write home about or in the negative. IndusInd Bank, the biggest loser this afternoon, 2.5% down. There's a note out today on paints, which is not too constructive. There are concerns in that note talking about the kind of festive demand that will be seen as well. Asian Paints down about 2%. Bajaj Auto numbers weren't half bad, but then perhaps some profit booking coming in there. iShares also responding to those numbers. HUL getting hit in trade today. Let's just pull up Nifty contributors for a second and give you a sense of where that lag is coming from, and it is RIL. Second day in a row, the heavyweight has not really bounced back. That's something that the street was hoping for, but it's not really happened. And even as we're speaking, Tata Motors numbers out for their sales. Total EV sales down 23% at 4680 units for the month of September. Their passenger vehicle domestic sales also down 15% overall. Tata Motors taking a bit of a knock even as we speak, and that's deepening on the chart. You can see that in today's chart. Tata Motors not doing too well. In the broader markets, Hersh, I would reckon slightly better maybe, but not too much relief that one can talk about.
Yeah, not at all. In fact, we clocked quite a low. 222 is what we clocked in terms of the intraday low on the Nifty mid cap, but we bounced back decently well. The Nifty small cap has held up quite healthily pretty much through the day, except that slight spike lower midway through the day. So we've done fairly well where the broader markets are concerned. The advanced decline, if we can quickly pull that up before I move to specific stocks, there you go. We're still holding in the green. The breadth of the market still positive on the advanced decline, despite the benchmark not doing as well and some bit of weakness there. Let's talk about some specific names, specific stocks. India Glycols, definitely something which is shining in trade today, expanding its distillery as well as biofuel ethanol and chemical capacities in Uttarakhand. Stock is up 8.5% in trade. Blue Dart doing very, very well as well. 9 to 12% of a price hike to be undertaken from 1st January 2025. That stock is also on a bit of a tear. Unichem Labs, company enters into agreements with Bayshore Pharma. That one is also up 2.5% in trade, so doing well. Angel One, they've revised customer charges, and on the back of that revision, 2.5% higher. It's been a wild day for Angel One, if to say the least. It's off nearly 5% from its highs. But holding up in the green on an otherwise tough day. ABB India, you're seeing that one also up 2.5% after an announcement that it's partnered with IIT Bombay to set up electrical machines and labs. Also, you're looking at gold financiers in focus. Muthoot, Manappuram, RBI cautious with regard to gold loan lending. Both of those stocks, if you can pull up Muthoot as well, lower in trade, 3.5% lower on Muthoot. Let's pull up three stocks in focus on the back of some blocks that happened yesterday. SpiceJet, Plutus Wealth bought a stake yesterday around 0.5% thereabouts. Stock is up well in the green, 6.5% higher. Also, they've paid off some of their dues to employees, 120 crore worth, and the stock is up and away in trade. Cyan DLM, HDFC Mutual Fund picked up a stake there, and 5.5% higher on Cyan DLM as well. Sterling and Wilson, we saw Shapoorji Pallonji sell an almost 6% stake, now holding just about 7%. That stock is having a tough day consecutive, down 5% yesterday and 3.5% lower today as well. PB Fintech doing very, very well in trade today on the back of a constructive Jefferies note, 6.5% higher at the day's high now. PB Fintech, extremely constructive. Jefferies 10% upside given, 1800 being the target price. We're halfway there versus yesterday's close. And Adani Energy Solutions also 1200 rupees target price, and you're seeing a good uptick on that stock pretty much through the day, holding on to that 3% gain that it has had. Auto stocks, of course, in focus. Outside of all of these, something like an Atul Auto, if you can pull that one up, doing very well in trade, 4% higher. Despite September numbers now 5% higher. There you go. September numbers still coming through, but 5% higher on Atul Auto. So some real buzzers in trade, especially in broader markets, Tamanna.
Okay, absolutely. So all the action on the broader markets coming in. I just want to pull up Tata Motors again. I know we spoke about it a few minutes ago just as the numbers have come, but the first cut looking a little disappointing on Tata Motors. Domestic sales are down 15% year on year at 69,694 units. EV sales are down 23%. Passenger vehicle sales are down 9%, and CV sales down 23%. Versus an estimate of 34,465. So you're seeing the Tata Motors dip coming in and that deepening to some extent. All right, Aditya Agarwala with us this afternoon, Head of Research and Investments at Invest4Edu. Kush Bora, founder at kushbora.com, joining us. Welcome to both of you, and thank you so much for speaking with us today. Kush, let's start with you. Very, very range-bound kind of a trade. Where is the struggle for the Nifty, and what would your call be on the index for this afternoon?
Hi, Tamanna. Hi, Aditya. Well, up until Friday, we had a Diwali party going on the Nifty. Yesterday, there were fireworks.
Yeah.
The fireworks came in yesterday.
That party got extinguished pretty quickly yesterday after markets opened, but yeah.
And how? But I think this consolidation is more than welcome. I think, the indices have had a stupendous run in the last, week or 10 days or so. And yesterday was, a big down move. So I think, investors, traders, everyone will be happy to see some sort of consolidation. Now, where do we go from here? There's a possibility that we might consolidate here for some time. The pressure might remain. And we are, at that support zone. 25,800 is a very strong support zone on the Nifty. We are slightly under it. Give or take 50 points is all right. The bigger support comes in at 25,500. If that gets taken out, that's when the trouble is. But up until then, I think this is more of a healthy consolidation. And in any case, I think last week the rally began from around those levels. So if we do retrace to those levels, it will still be considered healthy. Anything below that, is when the concern really kicks in. Now, on the way up, 26,000 becomes a stiff resistance. So what we are looking at is the Nifty at a support zone, consolidating. Again, not a bad time. The levels to watch for are 25,500 on the downside, and on the upside, 26,000.
Okay. What about on the Bank Nifty? What would your Bank Nifty call be this afternoon, Kush?
So Bank Nifty still has, a good risk-reward ratio on the long side. The only reason I'm not going out and recommending yet is because we've had, an up move, and that sort of fizzled out. And here the support is actually quite close, which is at 52,500, 52,550 zone. So, give it one more day, let the expiry pass by. Maybe Thursday, Friday, this uptrend could resume. But here too, if the consolidation goes on for some time, it's healthy. I am looking at a buy on dip end of a setup on Bank Nifty in particular, but I'm watching for the 52,500 level to be held. So give it a day, perhaps Thursday or Friday, you could see some sort of an up move kicking in, and perhaps on both the indices.
Okay, right. Aditya, your quick views with regard to the index?
Hersh, I think Bank Nifty is something which I would agree with. Kush is something which is looking interesting. I would actually stick my neck out and go long on Bank Nifty. Take that punt on the Bank Nifty. I wouldn't shy away from that. Though I agree that it's yet to form a complete bottom. But I guess give or take another 100 points from here on, Bank Nifty is looking good to me on the chart setup. It might just see a sharp turnaround again On the downside, 52,600 is a good support area. So maybe just keep a stop loss below 52,600 and look for an up move back to levels of 53,200 and then 53,500. If somebody is okay carrying on to the position because tomorrow is a trading holiday, then I think one can take that bet of going long on Bank Nifty at current levels because it's offering a good risk to reward, I believe. So Bank Nifty is something which does look interesting to me. And some of the PSU banks have started to outperform and add a Kotak Mahindra Bank to that name. Maybe Bank Nifty could see a good uptick going ahead. Yes.
All right, Kush, let me come to you with regard to picks.
Actually, just to add to the indices commentary, I don't think anyone, especially the investors, will mind today's move. Also, because the mid cap and the small cap are seeing a bit of traction. Not a lot of stocks are trading in red. You've got a lot of pockets which are showing healthy signs. So I think this consolidation and a slight flavor of the small and mid cap is quite healthy. Now that said, our picks are both on the long side. The first one is Deepak Nitrite. This stock, we've discussed in the past, has done rather well. Today, if you see, it's breaking out of that consolidation range. Yesterday, the closing was above the 20-day moving average. Today, you're seeing again, an up move on the back of decent volumes. I think from a near-term perspective, 3030, 3090 are the targets to look at. 2880 is where you place your stop loss. The second one is KEC International. Here too, you've seen a steady rise for the last 8-10 odd sessions. The volumes are thinning, but the price action is quite encouraging. So KEC International from a near-term target of 1075 and 1110 with a stop loss of 1010 can be considered. So Deepak Nitrite and KEC International, these are the two calls for the day.
There you go. Aditya, your calls for this afternoon?
I'm going to buy on Deepak Nitrite as well, Hersh. Looks an interesting setup on the charts for sure. So at current levels, I've got slightly higher targets than Kush. 3,200 is my target. It's more of a positional trade for me. A fresh breakout on the stock with a stop loss at 28.40. It ticks out the boxes. So 3,200 is the target. The second is Kotak Mahindra Bank. As I mentioned, I think Kotak Mahindra Bank is looking interesting to me on the chart setup. So one can initiate a fresh long position in Kotak Mahindra Bank at current levels. Look for a first target of 1950. That is where the chunk of the resistances are for the stock. If that is taken out, maybe 2100 is something that I'll look for. So 1950 is the first target with the stop loss at 1845. I'll go long on Kotak Mahindra Bank.
Aditya, let me stick with you. Tata Motors, there's plenty of movement, at least over the last 10 minutes. Of course, numbers have come. But your quick views, any trading call on Tata Motors at all?
I would actually wait it out, Harsh, because it's very close to 200 DMA. If it breaks 200 DMA, which is close to about 950 from there, stock has just bounced back. If it breaks 950, then I think Tata Motors is in for a big correction, at least a 50-point drop from that point. If it doesn't break 950, then maybe it will continue to consolidate between 1,000 and 950. So 50 point is the band for Tata Motors between 1,000 and 950. So I'll closely watch 950 level on the downside. The chart setup is weak, but the price action is yet to confirm a break below 950. If that happens, I'll go fresh short on Tata Motors with the stop loss at 1,000 and look for a target of at least 900 or maybe below than that.
Excellent. Kush, your quick take with regard to Tata Motors, levels you're looking out for?
Oh, no, I completely agree with Aditya. I think we both haven't spoken, I can promise you that, but the readings are exactly the same. Close to 200-day moving average support. If it does sort of break that, then further downside. So wait this one out if you don't have an existing position.
Super. Okay. Thank you so much. Let's quickly move on. We'll stick with the auto pack, of course, in focus. September auto sales numbers. Puneet joins us to break all of these numbers down. Puneet, how's it looking now?
Well, it was going all fine and well until Tata Motors has come out with the numbers and specifically their passenger vehicle sales have fallen by 9% versus an expectation of a 9% rise. That's one of the key concerns here that we can look at. Apart from that, the commercial vehicle space is another key negative. It was expected to have a 7% fall. It's a 23% fall in this particular month. And I also want to highlight the EV sales that has also fallen by 23%. That's slightly concerning because we have we have the new scheme now, the PM E-Drive, that's not considering electric cars, but especially one number which is the key negative, which is the passenger vehicle. Now, I want to talk about Tata Motors a bit more because over the last 5 months, they have reported consistently lower sales. It's down 3% for the last 5 months, and now another 9% fall puts it in a category which is on its own now. Now, we're still awaiting Maruti numbers. We'll see a very interesting strategy because while Mahindra has gone ahead and built up inventory, 23% growth for Mahindra specifically in this particular month. Tata Motors has, decided to stay the course, and one particular reason might be that despite having a fall in sales in the last 6 months, its inventory levels are more than 50 days, which is higher compared to the 1 month or 30 days they generally mention. Now, coming to other companies also, Mahindra and Mahindra, I spoke about 23% growth on the passenger vehicle side, and 27% growth in three-wheelers. That's another key positive. Another thing was the tractor segment. 3% growth was expected. That's come bang in line. Bajaj Auto is the other one I want to talk about. Really positive sales growth, 22% growth versus analyst expectations of just 10% growth. Another key positive was the exports. It's been around the 7 to 8% range, so it's much higher this time. While total sales have come in at 20% versus an expectation of 10%, as I just spoke about. The next counter here I want to talk about is TVS Motors. Another stellar performance. Both these companies have, been growing over the last 6 months as well, and this month is also another key factor here. They've grown by roughly 19%. Ashok Leyland, we just saw Tata Motors reported 23% fall. This was Ashok Leyland has come bang in line for a 10% fall, while VECV is positive. It was expected to grow by 1%, so it's the only player in the CV space that has actually grown, and that's because they've maintained lower inventory. Finally, just a couple of more mentions here for someone like an Escorts. While year-on-year number looks lower, 2.5%, on a month-on-month basis, grown 120%. It's kept inventory low around 8 weeks. So overall, we are still awaiting two big numbers, Hero and Maruti Suzuki. But, Tata Motors is a key negative, while someone like a Mahindra, Bajaj and TVS will be in the news for the positive side. Back to you.
All right. Thank you for that, Puneet. And, I'm waiting to see the Maruti numbers also coming in and what we will see there. But Tata Motors, of course, has been a bit of a disappointment as far as the first cut is concerned. Hemang Jani is joining us now for a fundamental view on what is moving the markets today. Tata Motors actually recovering in the last couple of minutes. But how are you seeing the auto numbers, Hemang? And let's start with Tata Motors.
Yeah, good afternoon. Thanks for having me on the show. So clearly, if you see the entire auto pack, so far the trend that was seen was that the two-wheeler as a space was doing well in passenger vehicles, and commercial vehicle segment was not doing so well. But now what we are seeing is that even within two-wheelers, you have some sort of a divergence with Bajaj Auto and TVS actually clocking better numbers, and Hero Motors, of course, is lagging behind. And I think for me, the most important takeaway was that Mahindra is the only company where you are seeing a positive traction when it comes to the numbers versus consensus. And more so, if you do a deep dive, on a revenue market share basis, that's the only company which is able to beat the competition hands down. So we think that, in the current scenario, it would be good to go with something like a Mahindra. I would not venture into a Tata Motor given the, inventory issues, the growth issues that they are facing. Also, globally, if you see, things are not looking that clear. So, and with 80% of the profit Tata Motor, generates is coming from JLR. So surely would avoid that at this point of time.
So that's on the passenger vehicle side. Hemang, what about the two-wheeler side? Bajaj Auto coming off. The numbers seemed decent. TVS, Hero also not doing too great today?
Yes, so far the trend was that the two-wheeler as a space was doing well. This month per se, I think Bajaj and TVS have done much better. Hero Motors, on the other hand, has been, losing out. So I think, given that all these stocks have done so well in the last, let's say, about 6 to 8 months, though we like, the numbers that Bajaj and TVS have reported, I would wait for a small correction for an entry into some of these companies. But surely Bajaj Auto remains our preferred pick within the auto and two-wheeler space.
Okay. So Bajaj Auto is still the top pick, seeing a bit of profit booking right now. Another area in focus is aviation. ATF prices have been cut. SpiceJet has been buzzing. So has Interglobe actually. But SpiceJet now about 6.5% up. And we are learning that 4 months of dues in terms of salary have been cleared. Aditya joining us for more details on that exclusive story. Yes, Aditya.
Hi, Tamanna. So exactly as you said, that SpiceJet has cleared the salary dues of amounting to rupees 120 crore, and basically these salary dues are for 4 months. Last 4 months salary dues have been cleared, and there is a serious turnaround in the airline right now. It clearly looks like the turbulence is getting over after that 3,000 crore QIP was raised by SpiceJet. And now we also need to focus on one more development that came earlier in September. PTI had reported, citing sources, that the airline had cleared the salary dues till August. So basically now it looks like the salary dues till the month of September for the airline are up to date, and from here the airline would be looking forward to expanding its fleet as it is on the cards right now, as it was told to NDTV Profit in an exclusive interview that SpiceJet CMD had with the channel. So only looking forward to how these developments take place in the aviation space for SpiceJet right now.
Okay, so SpiceJet is a story to watch. Remember, they have raised funds, and the question always has been how they would be able to actually revive the plane with the funds they've had. And that conversation we had with Ajay Singh, he makes it very, very clear in that they do not need to raise more funds anytime soon. Aditya Agarwala, what do you think of SpiceJet on the charts today?
Looks interesting to me, Tamanna. Somebody who has the appetite to take that kind of a risk in a stock like SpiceJet should definitely look at it. Personally, I like it. We have recommended to some of our high beta clients who can take that kind of a risk. On the downside, 50 to 55 is a good support area. And Tamanna, I think easily stock can test levels of about 90 to about 100. This is what we're looking at in the stock from current levels. There's a very good volume build up in the stock that we've been seeing for the past few weeks, which is very encouraging. At these levels, somebody's definitely getting into the stock. So yes, I would stick my neck out, maybe buy the stock at current levels, add on to it on declines to 65, 60, and put a stop loss maybe just below 50, and look for a target of at least 90 to 100 on the upside. More of a positional trade than just a day trade or a couple of days trade.
Okay, only for a day trader. Kush, are you staying away from SpiceJet at these levels? Do you see a further upside coming in? What are you doing if you hold it right now?
Well, Aditya and I have had few convergent views. I think it's time for a divergent one. Lastly, lest we sound, like we've colluded. This for me falls under the Vodafone, Yes Bank, Z Entertainment kind of category, where you've got these bouts and a lot of, interest, but the price action, doesn't really stick. For me, 75, the highs that it's made, it's tested twice already and fizzled out from there. Once it crosses that, we might perhaps put it on the radar, but until then, in the market, you've got so many clean plays and, so many stocks doing well. I wouldn't go, venturing a risky trade into some of these names. So SpiceJet for me falls under that category. Yes, it's showing some spark, but then as I said, the time and again, there has been spark and it's fizzled out. So I will stay away from SpiceJet.
So stay away from SpiceJet, says Kush. Hemang, fundamentally, is the turnaround story something that you're buying into?
So it's a high beta play, a dark horse kind of play, I would call it. And given the size of the fundraise that has happened, it will give you a lot of comfort. And coupled with that, cut in the crude oil price, the fact that the overall passenger traffic growth is going to be very strong, more so from a, let's say, next 6-month perspective, means that, it would make sense to have some allocation for a stock like SpiceJet. And I do think that, there is merit in getting into it at this point. It may turn a bit volatile, maybe, 5-10% kind of a swing it can always give. But I do think that the stock can give you, 30-40% kind of an upside over the next, let's say, about 6 months or so.
Okay. All right, so SpiceJet in focus. Another stock in focus, of course, is PB Fintech. We're talking about the big brokerage report of the day, and Varsha is joining us for more on what Jefferies is saying on PB Fintech. Yes, Varsha?
Thanks, Tamanna, for that. So yes, Jefferies on PB Fintech have rated buy with target price of rupees 1800. Now the note is based on management clarification on new healthcare initiative, wherein PB plans to invest $100 million for a 20 to 35% minority stake in the health maintenance organization, that is HMO model. Now this one-time investment will have no future liabilities, keeping PB's balance sheet asset light. Now timeline for the final details and board approval is in a few quarters. Jefferies sees this clarification addressing the core concern around PB Fintech's balance sheet remaining asset light. In the initial 3-4 years, the new venture can own 6 to 8 assets in the NCR and can move up to a franchisee model for geographic expansion as a proof of concept is established. Now, if you see, the global experience shows success with HMO models in the US, Brazil and Spain. Now, PB Fintech has yet to outline the specific structure for its HMO venture. If the new HMO model succeeds in reducing claim costs and enhancing customer experience, it could significantly improve long-term growth for the health insurance industry and boost PB Fintech's core business, according to Jefferies. Now, despite awaiting further operational details on this venture, PB Fintech's core business remain in a high growth phase. Now, if you see, the stock is trading at an attractive PEG ratio of around 0.6 to 0.8x for over 26 and 28 due to expected exponential earnings growth as per Jefferies. And lastly, the company remains a top pick for the insurance market growth as per Jefferies.
So, Jefferies excited about PB Fintech. We actually spoke to Yashish Dahiya of PB Fintech just yesterday. And while he was very excited about the idea of an HMO model, it's not yet clear what that would look like, because the contours of the deal and which company are they investing in, he kept calling it a company number XYZ in our conversation. What does that really mean? But Hemang, I want to come to you on whether you're feeling bullish about this idea of PB Fintech being an end-to-end service provider, from medical insurance to the actual medical facilities that a customer might need.
Tamanna, the way I look at this whole development is that as a theme, PB Fintech had a lot of interest because of the way the entire, the startup companies have started delivering the performance and the, clear-cut focus on the insurance segment, that actually re-rated the stock in big time. But ever since they came out with this news of, investing into healthcare company, there was a reaction of almost about 10 to 12%. Now, post the clarification from the management, Mr. Yashish Dahiya, what has come out very clearly is that they are looking to, take about 20-30% stake in the company. And then the company on its own will manage its affairs and have its own resources. So I think to some extent that has given some, relief for the market. But I think that, one should not get overtly positive on some of these companies, because when they're sitting on the cash, sometimes there is a temptation to move into areas which could create some capital allocation issues. So while there might be a little bit of retracement, I am not too positive on this company at this point of time.
Okay, Hemang, just very quickly, does this at all mean that there is going to also be an impact on healthcare providers, hospitals, the likes of a Max, the likes of an Apollo, the likes of a Fortis?
So clearly, pure play healthcare, providers like Max and Fortis, Apollo hospitals, I think they continue to do extremely well. And we think that the overall occupancy levels, the pricing part, they are extremely well placed. In this quarter also, we are looking at about 16 to 19% kind of earnings growth for some of these names. So we continue to have a positive bias. The top pick over there will be Apollo Hospitals and Max Healthcare.
Okay. Max Healthcare is top pick as far as hospitals are concerned. We're taking a very short break. We are coming back right after that with your top BTST ideas for tomorrow and a lot more. Stay tuned. right, welcome back. Let's take a look at how markets are dealing right now. Not too much of a recovery there coming in, and markets really struggling. The Nifty, though, in the green momentarily, but the story of the day is no doubt Nifty IT and Tech Mahindra, the top gainer. It's the top gainer of the day, also because CLSA has upgraded the stock to outperform. In fact, Rucha is joining us now to tell us why CLSA is so excited about Tech Mahindra.
Right, so CLSA has upgraded the stock from a hold recommendation to an outperform recommendation, and with a upside of around 10.5% and a target of 1749 rupees. Now, talking about valuations, the brokerage house values Tech Mahindra at 15% discount to TCS. So that is one of the positive points, that the stock is available cheaper than the IT giant TCS. Moving on to the EBIT margins, well, it expects that EBIT margin expansion has already been underway, and now order book is the next sort of milestone. In terms of recovery of the verticals, it expects financial services, healthcare and manufacturing to drive majority of the growth. However, the 15% margin target that the management had mentioned to achieve by FY27 looks kind of unambitious according to the brokerage house. So that is one of a pullback why the brokerage house has not upgraded the stock to a buy recommendation. And also it expects that the initial benefit of the new management will largely start coming up from the next 2 to 3 quarters, as in when the orders start, ramping up. And talking about the stock performance, well, since Mohit Joshi joined as the management in December 2023 last year, the stock is up about 25% till then. So all up to the new management on how it, executes the 3-year target that the company had mentioned in the last call.
Okay, thanks so much for that, Rucha. Hemang, both on Tech Mahindra as well as the larger IT story, you're seeing good traction in IT today after, of course, a bit of a downer day yesterday, 1% lower. We also have earnings right on the corner, on the anvil. Your sense with regard to IT, are you constructive?
While the numbers this quarter would be decent, the expectations somehow are elevated given the surge that we have seen in the stock prices, and there be some amount of disappointment, when it comes to some of the large IT companies. So we think that it would be good to have a broader call post the earnings and post getting some clarity about the growth. While entering into the earnings season, we are going with a positive view on names like HCL Tech and LTI Mindtree, purely basis the last quarterly numbers and the guidance that the companies have given. And we strongly believe that the tier 2 players, something like a Coforge, Persistent, they are better placed versus some of the large cap companies.
Coforge, you're still bullish on, the mood is moving to the large caps. But Hemang is talking about Coforge. We'll get a technical view as well. But first, let's break the story, which you're seeing on your screen. Sources have told NDTV Profit that market regulator SEBI will be taking action against Hindenburg shortly, since they have not yet replied to SEBI's show cause notice. Shrimi Chaudhary joining us with those exclusive details. Yes, Shrimi, what are you learning?
So remember, the SEBI has issued show cause notice to this American short seller Hindenburg Research and 4 others, accusing them of colluding to use non-public information to build short positions against Adani Group. So what we are picking up from our sources is that the process of passing the order is underway. SEBI is, seeking response from all the parties involved, all the alleged accused involved in the matter, and accordingly they are going to pass the order and initiate adjudicating proceeding against all those according to the findings in the matter. Also remember that according to the show cause notice issued by the market regulator, and as the SEBI probe found that these positions, the short positions which they have done, were squared off after the publication of the report, netting a significant profit of about 183 crore. So the sources are saying that they are looking at all the evidences. However, Hindenburg, despite reminders, have not responded to the SEBI show cause notice. And if they have not responded in the given timeline, they are going to pass order without their response. Back to you.
Shrimi, has that deadline passed? So can we now expect the order shortly? Or is there still time left for a possible response?
So what we are getting sense and indication from the top SEBI sources is that the entire proceeding is underway, and they have, Hindenburg has clearly stated to SEBI that they are not going to respond on the show cause notice. So it's kind of clear that they are not getting anything from the Hindenburg officially on the show cause notice and the question they have raised to this US short seller. So definitely they are going to, they are working on the evidences which they have right now with the regulator, and they will collate all the information and accordingly pass the order. And once the order being passed, then they will be, going to start adjudicating proceeding, and the final penalty will be done after, adjudication proceedings. So it will take some time, but we will see order at least in a month's time at least. That's the indication we are getting.
For those exclusive details, Shimi, so it's very clear that short seller Hindenburg has said it is not going to respond to the show cause notice, and SEBI is going ahead with that process. That big exclusive story right here on NDTV Profit. All right, let's come back to what's moving in the markets right now, and we're talking about IT stocks. IT stocks is the flavor of the day. We've got a fundamental view on it, but let me come to Aditya Agarwala on what he's liking best. Tech Mahindra is flavor of the afternoon, but would you be partial right now in the charts towards an Infosys Wipro versus a persistent Coforge, Aditya?
I would bet on the entire IT space, Tamanna, to be honest. This is something that I've been talking time and again. Coforge within the mid-cap space definitely stands out for me. I'm looking at a target of 7,600 to about 8,000 on Coforge. At current levels also, I'll be a buyer in Coforge. Within the large cap space, couple of stocks stand out for me, Infosys and HCL Tech. HCL Tech for me is a buy even at current levels. One can definitely look at adding on to the position for a target of 2,000, 2,100. As far as Infosys is concerned, that too can be added at current levels for a target of 2,200. So all three stocks within the mid cap space, the Coforge and the large cap Infosys and HCL, both look interesting to me. And I think IT is something that one should clearly bet on, at least for the next couple of quarters, and you can see decent gains in all the IT stocks.
Okay, so IT in focus, oil and gas also on focus. Just look at international crude prices. Let's pull that up for a second. Brent has actually cracked below $70 a barrel. Could be recovering at this point, but you're seeing pressure intensifying for crude prices. Look at the NYMEX right now, down nearly 2%. So sharp fall there. Mihika joining us. She tracks the oil and gas sector on NDTV Profit. Mihika, what's happening? Why are crude prices cracking?
Yeah, it's basic demand and supply scenario right over here. What's happening is the OPEC is set to meet tomorrow for a meeting to assess the global oil market. And however, media reports state that they have made no plans to change the resumption of the oil production that is set to be in December. So currently demand concerns in China and US is, in a potentially oversupplied market are weighing down and, taking completely over than the Middle Eastern conflicts that we do see. But, with the oil and gas that we do have in focus, let's just talk about where the Indian oil and gas currently stand. Now, let's start first about with the oil marketing companies. Now, IOCL, BPCL, HPCL benefit from the lower oil prices that we are seeing, and the OMCs are currently enjoying super normal marketing margins on petrol as well as diesel, are what brokerages are saying. Now, the current margins stand at in the range of 10 to 13 rupees per litre. When you talk about if margins are expected to contract, well, brokerages do expect a retail fuel price cut in the month of October of 2024, and the price cut speculations come on comments made by the Oil Secretary of India, as well as the state elections, especially upcoming in Maharashtra. Now, media reports do expect government to also hike the central excise duty, which is an indirect tax that is levied on the sale of petrol and diesel, and a hike on this is negative for OMCs. Now, when you talk about the impact on the retail price cut, well, CLSA says that a price cut along with higher oil prices could leave OMCs vulnerable in a scenario where there's also potential excise duty hike. MK expects healthy margins of 5 to 7 rupees per litre in H2 FY25, and this is despite oil price. This is if oil prices maintain a $75 range. JP Morgan says that a cut of rupees 2 will not hurt estimates, but 5 rupee cut will have an impact on the oil, on the OMCs if the current oil prices remain. Now, then the next aspect is the PNGRB report in December. Then the committee will be gathering to recommend measures to unbundle the gas transportation and marketing. Committee to review the marketing exclusivity of CGD companies. Now, JP Morgan says that any potential measures to increase competition is negative and could weigh on GAIL India, MGL, IGL, but it's too early to impact any business or earnings impact. Lastly, when you talk about analyst recommendations, well, in the OMCs, highest buy calls for HPCL and BPCL at 16, highest sell calls on Indian Oil on the other side at 13. GAIL India currently has 22 buy calls, 10 sell calls and 3 hold calls. Mahanagar Gas has a higher buy recommendation versus IGL and GGL at 16, while Gujarat Gas has a higher sell calls versus MGL and GGL at 14.
Thanks so much for that, Mihika. But let's zoom out a little bit, talk about the larger macro where commodities is concerned. And we have Ole Hansen, Head of Commodity Strategy at Saxo Bank. Good afternoon, Ole. Just quick check with regard to where you see, especially oil and crude, given the kind of geopolitical environment we're seeing at the moment. What's your sense, where to from here?
Well, good afternoon. Yes, well, the sense in the market is really that the sentiment is quite heavy, and we've seen, as you mentioned, these geopolitical escalations once again, and once again the impact is not being felt, simply because the market has seen multiple geopolitical risks emerge, come and go now since December last year. And every time we've basically seen the market comes to the conclusion that this is not going to have an overall contagious impact on supply from key producers in the Middle East. And that's really the assumption that's once again driving prices lower. As you just mentioned in the previously, that the market is focusing on supply that is not wanted at this point in time. We got Libya potentially increasing production back up to their capacity within the coming weeks, and then we have the prospect for OPEC Plus abandoning their higher price stability target and accept lower prices as a price to pay for being able to increase production. So in the short term, prices are being weighed down by this, and we're really watching this 70 level in Brent crude. If we do see a sustained break below, then we are potentially heading for 65 next.
Mr. Hansen, good afternoon. Tamanna here. Just trying to understand, so of course the OPEC plus wheat becomes a big trigger. What is the likelihood of Saudi increasing production, and how low do you see crude prices going if that does happen?
Well, we saw that FT article last week breaking, indicating that Saudi Arabia was prepared to abandon their targeting a higher price and instead go for increased production. And if that turns out to be the case, if it's done as part of the OPEC Plus framework, then I think the impact potentially could be relatively limited, simply because there's a lot of cheaters within the OPEC Plus group that needs to be brought in line. If that doesn't happen, then there is a risk that oil prices could drop lower than the $65 level I mentioned in the short term. But it also very much hinges on the outlook for the global economy. I would say if you look at speculative positioning in the oil market, both crude and fuel, the hedge funds are currently almost pricing in a recession, and we don't really see that as the base case. So positioning is very weak right now and geared towards even lower prices. And with that in mind, we need to keep an eye on what OPEC does next.
Right, and just your quick take with regard to gold and silver, where do you think they're headed from here? Because we've seen a very strong rally in both those.
Oh, gold and silver, fantastic markets. It's really been the year of the metals so far. I think the reason why gold is going up is based because we're living in a very uncertain world. The main drivers are not going to go away anytime soon, but also we have to accept that nothing ever goes in a straight line. I see some consolidation starting to emerge in the gold market. I think that potentially could last for a while, but overall I still see the long-term direction towards higher prices in gold, and with that, probably also silver, supported by a recovering industrial metal sector.
Right, and therefore is silver the better bet at this point?
I believe so, yes. Simply because we've seen this past week that the recovery in copper has had a quite strong impact on silver. But overall, if we see gold markets continue to be underpinned and a recovery in the industrial metals, then I see silver do better than gold in the coming months.
Okay, thank you so much, Mr. Hansen, for taking our time. Have a great day.
No problem, you too. Thank you.
Right, Himang, let me come straight to you. What's the sense like, given the fact that you're going to expect is first off, is $70 a barrel the new normal now? And therefore, does the story change at all for any of the players?
I think, great news for us that despite such a geopolitical tensions, the crude prices continue to head lower. And I think surely it's going to help, in terms of our overall, flows, in terms of overall, positioning that we have. And I do think that though oil marketing companies have underperformed, the intensity of the fall actually provides a great deal of buffer. Even if the government goes ahead and does a price cut, on a net basis, they will be a big beneficiary. So I would surely look out for buying opportunities, across BPCL, IOC, HPCL. From a, let's say, tactical next 2 to 3 months perspective.
Okay, so good news for us. I want to see what's happening with ONGC right now. ONGC and IOC as well. ONGC cracking under that pressure of crude prices. IOC in a bit of a recovery. Oil India also cracking because low crude prices not necessarily good for them. It's good news for the OMCs. Let's see BPCL, HPCL. Whole host of news. Oil and gas sector has been very, very active, and you can see the bump up on HPCL coming in. BPCL still down in the dumps to some extent. Hemang, you spoke about how it's good news for us, but I just want to get a view from Aditya on the charts for HPCL, BPCL, IOC. How are these looking to you right now?
They're looking interesting, Tamanna, but all three are not a buy for me at the current levels. HPCL definitely stands out within three, and at current levels, I would be a buyer in HPCL for a target of 590 to about 490 to about 500 on the upside, with the stop loss on the downside at 425. So this is something which is offering a good risk to reward. I would avoid getting into a BPCL. IOC is more of a positional trade if you really want to hold it on for at least a 6-month kind of a time frame, then IOC definitely makes case. But at current levels, HPCL is something which is looking very interesting to me on the charts.
Okay, some breakouts this afternoon. Just pull up a Kaplan point and look at what's happening there. Huge run up on a Kaplan point today. Some stocks which have really been moving massively. 10% up right now. Let's look at an MOIL. Remember news coming in that manganese prices are going up. MOIL, I did see a bit of a move. I'm not too sure what's happening to that counter right now. Britannia has hit an all-time high. Britannia is one to watch out for as well. And Kush, this is one space that you've been talking about. Colgate actually more than Britannia, but you have been talking about FMCG. Are you finding the moves in Britannia interesting and something which are actionable for our viewers today?
Tamanna, so much so that today in the FNO show at about 10:30, Britannia was one of our pick split targets of 65.70 and 68.90. The stock is more than about 100 rupees up since since the discussion we had this morning on the show. So that view continues, although it's approaching overheated territories right now. And, who would have thought that, we'd ever say a sentence like, stock like Britannia is approaching overheated territories, but, that's where we are. But continue to hold with the stop loss now. You could bump your stop loss up to your buying price, apply a TSL close to 60 to 50, 6,300 levels. but continue to hold. The moves are very solid. The volumes haven't skyrocketed, but they are clocking the monthly averages, pretty consistently. So Britannia still very constructive. Positional target of about 6,900 on this one.
And what are the BTST calls for tomorrow, Kush?
Comes from the chemical space. A stock that we've discussed in the past has done well, continues to do well. That is Sudarshan Chemicals. The stock has rebounded quite smartly, and in the last 2 or 3 sessions, if you see, these stocks actually gained quite a bit of traction. The momentum indicators have also gone past some of their resistance zones. So this uptick could continue. 1145, 1175 are the targets. 1085 is where you place your stop loss. So Sudarshan Chemicals is, the BTSC, or perhaps even a positional bet if you want to consider.
And Aditya, what about your BTST calls?
I've got a couple of them, Tamanna. The first is ABB. Looks very interesting to me on the chart side of the entire cap goods space. Is looking interesting. Siemens, Cummins, ABB. ABB I've picked up for our viewers at current level. It's a buy for a target of 8775 with a stop loss at 8050 on the downside. The second stock is Jindal Steel. Most of the metal stocks are down today slightly, but it's a good idea to go long on metals at today's price correction. So Jindal Steel is something which is looking interesting to me. At current levels, I'll be a buyer for a target of 1100 with a stop loss at 1000 on the downside.
Okay, let's pull up some other stocks up from the day's lows. In fact, Jaiprakash Associates, if you can pull up Garware High Tech Films, just a few stocks which are doing fairly well. Okay, 5% higher. JPA, really nothing there. But there you go, Garware, right from the bottom, it's done fairly well in trade, at least at the moment. 3.5% down at the bottom there. TCNS Clothing too, from the 3.5% lower mark to up roughly 2% TCNS Clothing, and Ujjivan Financial Services as well. Kush, any of these on your list at all?
Quite surprised to hear the name JP Associates. It's popped up after, I think, less than half a decade, maybe a little more. But again, no recommendations stay out of this. This is just a price action that, has been highlighted. But stay out of this one. Garware High Tech, this is, I think, the story of the year. What a phenomenal run this one has had. And despite the kind of moves that you've seen over the last few sessions, I'm not even including what is done throughout the year. Where it started from about 1400 to all the way up to 34, almost 4000 now. The stock's not even close to the overheated territory, so you'd want to consider that. Not a bad idea to perhaps accumulate at dips closer to 3700, 3750. If those are the levels that you can get it at, then it will be a good entry point. Very strong on the weekly and the monthly setup as well. So this is one stock that we like. So Garware High Tech is something that you can keep on your radar, especially on declines.
Okay. You also have a couple of other movers. Let me just pull those up. Something like a Cyan DLM doing super well in trade, 6% higher. Aditya, constructive, of course, brokerage notes on the fundamental side. Also, there is some interest coming in terms of large investor interest. Cyan DLM on your list at all?
I can look at it, Hersh. Maybe not today, maybe on Thursday. It could be a good idea to look at it. It's facing resistance close to about 200 DMA, which is at 720. So I would wait it out for the stock to cross 720. Once it's trading sustained above 720, then maybe, yes, I can buy the stock for a target of 820 to about 880 on the upside. Not a bad one to keep in your radar, but just wait out for immediate resistances to be taken out.
How are you feeling about Phoenix Mills, Kush? Let me come to you on that. 6.5% down. Sobha also hurting. I mean, real estate has been a bit of a sore story last several sessions actually, but Phoenix Mills in particular has been losing a lot of steam. Are you seeing the bottom here?
No, not on Phoenix. This stock was consolidating. It had a broadish band of about 1900 on the upside and about 6050 on the downside. Bang in the middle of that. Today, the closing in all probability will be below, the convergence of key averages, about 1770. I don't think the bottom is in place yet. You might want to wait. If at all someone is keen on buying, you should wait at the 1650, which is the lower band. If it does sort of hold up and rebound, then you can do a range play where, as I said, 1650 on the downside and 1900 on the upside. Sobha, I'm constructive on, but 4 days of fall, not stemmed yet. So again, don't want to catch a falling knife. I'll perhaps wait for levels of 1790, 1820 on this one. those are the support zones. If it does sort of take support there, that's the one that I will look to buy first. But Phoenix doesn't look like it has the bottom in place. Soba could be a buying candidate at lower levels.
Hemang, let me come to you with regard to financials. So housing financiers have obviously been probably flavor of the month of September, given Bajaj Housing. Also, life insurers, on the other hand, have moved slightly on the softest side now. We've seen some bit of correction there as well. Something like an Aadhar Housing, would that at all pop up on your radar? And any of the life insurers, would that interest you at all?
I think Aadhar and some of the smaller housing financiers, be it LIC Housing, and maybe a couple of more on the mid-cap side of it. I think given the fact that the overall growth continues to be very strong on the real estate side, and also when you have a lower interest rate scenario, typically the NBFCs tend to do better than the banks. So from that perspective also, I think housing financials do make sense. As far as insurance companies are concerned, I think because of the delay in the GST Council meet, there was a bit of a disappointment. But when you look at most of the parameters, annual premium equivalent and others, I think they continue to report a very sound growth. So we do like HDFC Life and SBI Life within that space.
Okay, thank you so much for joining us, Aditya, Kush and Hemang. This afternoon, as we wrap up, we're wrapping up a muted day of trade, to be honest. Not too many movers. I would say some capital market play moves are taking place. So if you see a K Fintech, you see a Nuvama, you see an Angel One, maybe some activity there, relief. Perhaps at no big move on F&O so far. This is Angel One. They've increased their fees as well. But if you look at a K Fintech, also zooming today in trade. Nuvama, they're seeing some profit booking, 11% up on the stock. But let's come back to the heat map and completely flat. You're closing completely flat, which is not necessarily a bad thing. It could have been worse. So let's look at this glass half full this afternoon. It's all about IT, Hersh, Tech Mahindra, Infi, Wipro, buzzing. The Adani twins doing well, nearly 2% up on Adani End and Adani Port, also 1.5%. Britannia, as the breakout story, has touched an all-time high on its stock price, and interesting moves on the chart. No specific fundamental reason why Britannia is running today. A smattering of banks are doing okay. So an SBI is fine, a Kotak Mahindra is fine, but look at a Indus In on the losing side. Bajaj Auto has come off a fair bit. Auto is the other story of the day. So depending on which side your numbers came in, that's how the street is treating you. M&M was looking positive, beat estimates. Tata Motors not so much. Bajaj Auto maybe not as much as was expected. RIL having another down day, second day in a row, and that's what really hurts the index. Let's pull up the contributors for the Nifty to get a sense there, and look at what really is pulling down the Nifty. So we'll pull up
likely RIL, HDFC. There you go.
Absolutely, yeah. So you have the heavyweights not really pulling their weight. One, Infosys is not going to do it beyond a point, and that really is the problem, isn't it, Hersh?
Absolutely. It seems like. So RIL, HDFC really pulling down the index, of course. But we've closed flat. So as you said, no complaints there. But let's look at the broader markets, if we may. Pull up the mid cap as well as the small cap. They've done well. The advanced decline also suggesting good breadth. At least not negative at the moment in terms of the breadth. There you go. And so we've stayed healthy pretty much where the broader markets are concerned. Let's also quickly pull up the BSE 500 in terms of specific stocks which buzz. Those are all that you have. VMart strong volumes, PB Fintech. There's just so much happening in that counter. Difficult to sum that up. But a 5-star business up 6%. It was up just about 4% when we started the show. So clearly some spike seen there as well, likely. But Westlife Foods on the losing side. We also saw Jubilant Foods under some bit of pressure today. Not reflecting in this list, but nonetheless under pressure. Soba, Godrej Industries, Phoenix Mills, some of the other ones which were under pressure with, of course, some gold financiers. Those were also in focus today on the back of the RBI caution or rap on the knuckles of sorts.
Yeah, what is interesting is while gold financiers were down, a lot of gold retailers were doing very well.
Yes.
PC Jewelers, Kalyan were having quite a decent day, and more maybe going into the festive season. Well, markets are shut tomorrow for Gandhi Jayanti. So on the live markets coverage, of course, we'll see you back on Thursday. But meanwhile, all the buzz right here on NDTV Profit. For now, from Hersh, me and the team that put this show together, thank you so much for watching.